VOO is the Vanguard S&P 500 ETF. It is one of the most well-known, most trusted, and most widely held index funds in the entire world. It tracks the performance of the S&P 500 index, which is a collection of 500 of the largest publicly traded companies in the United States. When you invest in VOO, you are buying a tiny piece of companies like Apple, Microsoft, Amazon, Nvidia, Google, Meta, Berkshire Hathaway, Johnson & Johnson, and hundreds more. This fund is designed to give you instant diversification, long-term growth, and low cost all in one package. Let us break it down in plain English. VOO was launched by Vanguard in the year 2010 and has quickly grown into one of the largest ETFs on the planet. As of now, it manages over $1 trillion in assets. That is trillion with a T. The expense ratio is just 0.03%. That means for every $1,000 you invest, you are only paying 30 cents per year in fees. This ultra-low fee structure is one of the biggest reasons VOO has become the go-to ETF for long-term investors, especially those who want to build wealth passively. Now let us talk about performance. Historically, the S&P 500 has returned around 7 to 10% per year after inflation. That includes bull markets, bear markets, recessions, and recoveries. Over the last 10 years, VOO has averaged about 11 to 12% annual returns, depending on the time frame. That means if you invested $10,000 10 years ago, you would have close to $30,000 today without lifting a finger. That is the power of compound growth. VOO pays a quarterly dividend, and the yield tends to hover around 1.3 to 1.6%. That means if you had 1,000 shares of VOO, which would cost you roughly $430,000 at current prices, you would be earning about $5,600 per year in dividends. For someone holding 100 shares worth $43,000, that would bring in about $560 annually. While this is not a high dividend yield compared to income-focused ETFs, the growth in share price more than makes up for it over time. Let us talk about the holdings. VOO is market cap weighted, which means the biggest companies have the biggest influence on the fund's performance. As of the latest data, the top 10 holdings make up more than 30% of the entire fund. These include Apple, Microsoft, Amazon, Nvidia, Alphabet, Meta, Berkshire Hathaway, and a few others. The rest of the fund is spread across hundreds of companies from sectors like healthcare, financials, industrials, consumer goods, and energy. This gives VOO broad exposure to the entire U.S. economy, but it is still heavily tilted toward technology and large cap growth stocks. That is something to keep in mind, especially during tech corrections. One of the best parts about VOO is that it is a set it and forget it investment. There is no need to rebalance. There is no need to stock pick. There is no need to time the market. You just buy shares regularly, hold them, and let the market do the work. If you are dollar cost averaging into VOO, putting in $200 every week for 10 years, you would have invested about $104,000. With an average annual return of 10%, that portfolio could grow to over $170,000. Add in dividends and reinvestment, and the growth is even more powerful. Now let us address risk. VOO is not immune to market downturns. In a major recession, the fund can lose 20, 30, or even 40% of its value temporarily. But unlike individual stocks, VOO recovers because the underlying companies eventually bounce back. Historically, every bear market has been followed by a bull market. The longer you hold VOO, the lower your chances of losing money. Vanguard even says that if you hold the S&P 500 for 15 years or longer, your odds of a positive return are over 99%. On my meter rating, income gets a 6 out of 10. The yield is low but consistent. Growth potential gets a 9 out of 10. This fund tracks the overall market and includes the best companies in the world. Risk control gets an 8 out of 10. It is diversified, but market risk is always present. Simplicity gets a 10 out of 10. It does not get more beginner-friendly than this. Sustainability is a 10 out of 10. The S&P 500 is not going anywhere. Overall, VOO scores a 9.5 out of 10 on my meter rating. This is one of the best ETFs ever created for building long-term wealth. Whether you are saving for retirement, investing for your kids, or just looking for a simple way to grow money over time, VOO delivers. If you have any videos you would like me to cover, say it in the comments below and I will break it down in plain English.